Good morning everyone and welcome back to another edition of Morning Markets here at 2 Potential. Today we're going to focus in on growth and what we believe is driving the recent strength in global equities. So as you can see on screen, another firm day for global equities, broad-based strength across regional markets, and in fact the FTSE All World Index as measured in US dollars has recently climbed to an all-time high. And that really reflects that there is a tailwind for global earnings within the equity market. What's driving that? Well, it's clearly global services. At the month end, we've just had the latest round of purchasing manager indication activity data. That gives us a sign of activity in industry, particularly in the manufacturing sector and in the services sector. And both the manufacturing and services sectors continue to paint two very different stories. In fact, the manufacturing sector globally looks to remain in a deep recession. In fact, could almost be called a depression in places like Germany. The input prices for German manufacturing have declined at the fastest rate in history, and factory output, the actual production of goods which leave the manufacturing line, are now at their lowest in 3 years. And indeed, payrolls within the German manufacturing industry have actually declined for the first time in 2.5 years. So clearly there is a recession within the manufacturing industry, and it's probably being led by China as the overhang from COVID, but particularly from the credit fallout from the housing and commercial real estate recession in the previous 2 years continues to loom large over the domestic economy there in China. And getting through that credit recession perhaps will take some years without any intervention from the central bank or from the government. If there is fiscal stimulus in China, that could alleviate some of the pressures. But the overhang from China is clearly feeding through into the global manufacturing sector. And even in the UK, we had some reports of a softer output from manufacturing, but not as much as in Germany. But on the other side, the services industry globally continues to boom. In the US, we've had the fastest rise in foreign demand in 12 months. Job creation has slowed, but only because it's getting more difficult to hire workers and indeed to match skills with new employees in the US services sector. And indeed there, whilst manufacturing prices continue to fall, services prices continue to rise, not just in the US, but in Europe and the UK as well. And to put some colour on that with regards to the price pressures in the services industry, Ryanair and EasyJet recently reported earnings for Q1. And in fact, what they're saying is that the prices they charge per seat have gone up between 22 and 40% in the last year. So you can clearly see that these companies are able to pass through price pressures to the consumer. And that really indicates that there remains enough demand to support economies which are service focused. So please join us tomorrow as we'll begin to prepare you for the next round of central bank meetings, beginning with the US and the Federal Reserve meeting for the month of July. Thank you.